Right now, there are 3 trend continuation trading setups that I'm looking at taking personally on my Forex portfolio. And I want to walk you through these to kind of get you into how I'm thinking, what I'm looking at, my thesis, my predictions, and then how I'm looking to drill down and get involved in the most high probability move with the most minimal risk, maximum reward to risk profile, maximizing profits. And I want to break it down bit by bit. So let's get stuck in. First thing you need to understand about the Forex market is it is in consolidation about 70 to 80% of the time. So we may have micro trends or bigger trends even, but when we have these trend continuation moves, what follows that is some form of consolidation, either a sideways move, a flag, a channel, a compression, and then we'll break out again and we'll go into a trend for a brief while, 20-30% of the time, and then we'll go back into consolidation. So what that means is the majority of my trading is in consolidation, but I'm primarily a trend continuation trader because I make most of my profit on the trades that I take the least of, right? So basically, you want to have both. You know, I always say that it pays to have both because when we're not consolidating and some other pairs are in trend, that compensates for the majority of your setups in consolidation or aren't doing very well, and then vice versa. So when we have a big period of trending moves, your consolidation patterns might not be that prolific, but you're making up money in those situations for trend continuation, and usually they're a lot greater, okay, because they're extended moves a lot of the time. So the 3 pairs I'm going to share with you is Aussie CAD, Aussie dollar, and we're going to take a pound Aussie. And it's 2 bullish setups and 1 bearish setup. So in other words, 2 I'm looking to get long, 1 I'm looking to get short. So the first one's the Aussie CAD, and the first thing I'm doing is going out to the daily time frame because I want to use top-down analysis to see where we're at in the grand scheme of things, but also to make a prediction in the run or the direction of the prevailing trend, which is the bigger trend, and then see if I can get involved on a lower time frame. One thing I'll note about the Aussie CAD is look at this big bullish run here. You can see we've had this massive bullish run from mid-Jan upwards, and you can see that we're a bit of a decision point today because if we close down here and we have this rejection and we're overbought, right, on the RSI on the daily, this could mean that we're going to see a bit of a retracement here before we continue up. In other words, we're seeing resistance from previous structure. If we just bring on this level right here, you can see that previous structure, that the high of this previous candle that closed, this one, yesterday's candle, is 95.47, and if we scroll back and look at the high of the previous candle, this one, it's 95.48. So it's 1 pip higher. So we didn't close above that, which means that's being respected. Okay. And if that's being respected and we get a big rejection candle on the daily, then we know that that's, you know, there's a high probability that we could see a hold here and we could go into some form of consolidation for a while. Right. So that is one indicator that may mean that this isn't as attractive as a trend continuation setup right now. It might be tomorrow if we put in a new high, I'll be bullish, and we'll be looking for the next new high looking left, but just bear that in mind. However, if you're more of an intraday trader and you're looking at the 4 hour as your higher time frame, you can see we've already closed above. Okay, so if we've already closed above, then we can now go down to our trading time frame, which in this case would be the 60-minute, and we can start looking for entry techniques. Now, if anyone's looking for trend continuation, what you're normally looking for is the run, the pullback, the run, and then you're looking for a pullback and you're looking to get in on the best price on the pullback. Now you can see here, this candle here, right, closed. So the close of this candle is 95.47, and the high of this candle is 95.46. So this one closed higher than this one, which means this was the new high. Okay, so if this is a new high, right, it means that this was the outside return or the retracement, right? Outside retracement or pullback. Okay, so let me just draw that on for you so it's crystal clear. We had a run here which put in a new high, and then we had a pullback. Okay, and then we had a run which was a higher high again, and now we're in a pullback phase. Now, where do we want to look for a buying opportunity, or where do we want to get in on a trend continuation setup? On a pullback, right? So we've now got a pullback into a zone, right, where we are interested potentially in buying this up. What do we need to consider next? Well, we need to consider how we get in, what our risk reward profile needs to be. All right, so let's do that first. If I just thicken this up here, we can see, let's just bring on our long position tool and just plonk this anywhere. But if this is the outside return, we're going to want to get our stop loss below that outside return, that previous pullback, ideally. And if we're using an ATR based stop, right, average true range, we could say, okay, well, if the low of that outside return is at 95.12, our ATR based stop will get us below 95.04, say, or 90 plus front running. And if our target's going up at the highs, then we know now where we'll get a 1-to-1. So we want a minimum of a 1-to-1, right? So we know that we need to be below this line here, okay? Below this here where it's 95.44, right? And then what we can do is we can narrow this kill zone down. So we bring on our rectangle tool and we say, this is the kill zone, okay? So right here is where we're going to look for, we'll color this in pink. This here is where we're going to look for our entry, okay? So what do we now need for an entry? Because we've got the run, we're in that zone, tick, right? We're pushing right back down here. We're actually 1.6 to 1 at the moment. Now, if you're aggressive, you could just take this. You could buy it long and you could just get involved, right? If you're a bit more conservative, you could look for an entry technique called a higher high, higher close. And what that means is we're waiting for a candle to close and then we're waiting for a higher high, higher close candle on the next candle. And that means you have to be a bit patient. But what it does also mean is there's a higher probability of the market rallying from that point, okay? So we have to be a bit patient. We have to let market dip into this zone. And then what we're waiting for here, let's just say that this candle closed right now. Let's just pretend this candle's closed right now. What we would need is the next candle to have a higher high and a higher close than the previous candle, okay? So it could look like this, or it could look like, you know, it could look like this, right? Where you got the wick is a little bit higher, but ultimately the candle needs to have a higher high and a higher close than the candle prior. So this one here, right? The next rule is it needs to close within this zone, because if it doesn't close within this zone, if it closes up here, then we haven't got our 1-to-1 reward to risk profile anymore, right? We go 0.9, it goes inverse reward to risk profile. So you have to have all the rules play out in your favor. You know, it has to all meet, all the stars have to align in your risk tolerance, in your strategy tolerance, whatever that might be, whatever you've tested. But this is a great way to enter that's more conservative, but still gives us a really high probability opportunity. And you're not going to capture as many of these as you are just aggressively entering as soon as you dip into the zone, but you'll be right more. So what's the point in taking more trades if you're not more profitable? You want to be more profitable. And over time, your job as a trader is to take less trades, be right more, and just have more profit, right? So that's what I'm looking for. On this particular setup, what I'm looking for is a higher high, higher close. Now, the last chance that I'll get to enter this is if we test this zone down here, right? Which is going to be, let me just dial that down a bit. So this purple zone down here, if we push into the purple zone, I can look for a double bottom on a lower time frame. So I can go down to the 15-minute and I can just look for a double bottom in this purple zone, which means if I get a double bottom, I'll be able to enter on the double bottom. I can get a tighter stop potentially, and I'll still take my targets at the original position, which means that's what I call a last chance entry. It's normally a 3, 4, 5 to 1, sometimes even more. So that would be the last chance entry. And the way I'm ultra conservative on that in terms of a double bottom is because if we push right down to the bottom of this pullback, what are we doing? We're weakening in trend. So It's the last chance entry, and it's the least most probable, but it has the lowest strike rate, but the massive reward to risk profile. So you don't need many of these to have a really great boost in your account. Make sense? So that's what I'm looking at. Initially, I'm going to be looking at this 60-minute higher high, higher close setup. And if we can get that, depending on where it closes and I get a minimum reward to risk profile, we can get in. That's the first one. The second one is very similar. This is on the Aussie dollar. Okay, and again, if I go out to the daily time frame, we can do the same thing again. See this big run? Now, the difference with this big run, and this is a little bit more attractive, right, is because the next high, we've got a bit more room to move here, because if you look at the next high, it's up here. Okay, so we've got a bit more room to move. Yes, we're in this kind of previous head and shoulder zone, but I'm really just interested in this zone up here, and that's where I think we're going to test. Again, the daily candle will be telling. We've got a big rejection candle playing out now. We'll have to wait to the end of the day to see how that plays out. But again, if we're intraday traders and we're looking to get in and out before then, there is a real opportunity right now, because the 4-hour is showing bullish and new highs. The 60-minute is showing a pullback, really nice pullback here. Right, and the outside return on this one is here, or the pullback zone, the previous pullback zone's here, which means we need to do the same thing here. But look at this, we're pushing really deep into that already. So this could be a last chance entry, because remember, our last chance entry is at the lowest low to the lowest close, and I haven't gone into too much detail on those because I've done a whole series on that. And if you want to go and watch that series, you can go and watch it right here. I'll put the link here for the 5-part video series on how to trade my trend continuation strategy, Greystone trend continuation method. There's 4 ways of entering a trend, attacking the same move. So you can go and watch that, and I'll tell you how to test it and all of that stuff. You'll love it. So make sure you go and stick that one in your watch later and just go and binge on that one. But again, we're going to set our reward to risk profile first. So just plonk that anywhere. We know we're getting out at the high. In this case, you know, we need a ATR below the low of the previous of the zone. Okay, so if we're at 70.20, we're going to look at around 70.09, and that's already a good reward to risk profile where we are. If we're up here at the top of the zone, that's a 1-to-1, so that's the minimum that we can enter. That's the absolute highest we can enter, and then more realistically, we're going to get in somewhere down here, hopefully, which is going to be closer to a 2-to-1, a 1.8 to 1, 1.9 to 1, something like that. Now, all we need to do, ideally, what will happen now, in an ideal world, this candle will close, right? So we've got 35 minutes until the close of this candle. But if it closes like this, and then the next candle looks like this, right? It doesn't matter how much it closes. The high and the close is above the previous candle. It just needs to be a higher close, and obviously the lower the better, because you're going to get the better entry, right? Because this is going to come down. If we close up here, we're going to have to adjust this, which will mean our reward to risk profile isn't as attractive. But so the lower the better, but it has to be a higher high and a higher close than the previous candle. Okay, and that actually, if this is a pin bar like this or a doji, this would also be called a 3-bar reversal. Okay, so then we'd be able to get in like this, straight on this candle, enter at market, the next bar market after this candle's closed. Got it? Again, if you're aggressive, you can just enter this, and then the last chance entry, which is this one's more relevant to, we can drop down to the 15, and we're already in this zone, right? Now, what I'd need now is I'd need a retest, a double bottom. So I'd need something that looks like this. We'd need, the pin bar's already there, so that's looking promising. And if we can get a retest like this and get a double bottom, and you get divergence on the RSI, okay, I would enter this as a normal double bottom, except my target would be set on the trading time frame, so I wouldn't move that. The only thing I'd move is the stop loss, because I'd now be an ATR below the double bottom, which would just tighten that up a little bit and then give me a really, really nice 4 4.5 to 1. So just on these two trades, if I get the second chance entry on both of them, I could potentially, you know, have a couple of trades that are both 4 to 1, which would be very, very nice. If you're risking 1% on each trade, you know, that's an 8% return just on those two trades, which is pretty good, right? Now, the last one I want to show you, I appreciate this is a long video, but this is trading, and trading takes ages to learn. So if you've got a short attention span, you'd probably want to dedicate your time to doing something other than trading, because it's probably not going to work out very well for you. But the other one is the pound Aussie. Now again, we are at a major decision point here. If you look left, we are at this choppy zone of really respected support previously back in January 25. We then tested again, and this is the first time we've been here in a year. It's now January 26, and you can see how price is behaving here on the daily already. Had this big fall. Now two things can happen here. See this? Had this big fall into previous structure. Really solid move. If that can mean two things. It can mean the bears are really going to try and push through this zone and make sure that we close way below it, which is a very strong indication that we're going to continue down after that point. Or if we have that strong bearish move and bang, we hit it like a concrete floor and we start rallying off of it, or seeing this rejection candle like this big pin bar here, or low test candle, that's a strong indication that we're at least likely to see a pullback or a rally to the upside, even like if that is before we see a continuation to the downside. Okay, so there's some clues there. But again, I'm going to give you the intraday perspective as well. People who want to get into trades right now, 4-hour time frame. If that's your higher time frame, we've already put a lower low, lower close here. Okay, now pulling back up, we've got a pullback phase. Okay, let's go down to our 1-hour time frame. We're now in a pullback. We can start looking for where we enter. Where is our zone? This is our kill zone. I'll color this purple. So this is what we're looking at. Again, this is going to be a short position, not a long position. We're going to enter somewhere in here. We know our target's going at the low, and our stop loss is going to go an ATR above the high. So if we're at 96.60, it's going to be about 96. It's a bigger ATR on this pair. And then we're going to be entering in here. By the way, if you don't know what ATR is, it stands for average true range, and you can look it up in here. You can add it to your thing, and to find out what the average true range is on that particular candle, you just hover over the candle, or the latest candle, okay? And you can see down here, it will tell you what the average true range is. It's about 33 pips at the moment, okay? So as I say, it's much higher on this pair than it is on the other pairs. So now we can work out where our minimum 1-to-1 is, which just so happens again to be at that low point of the previous low. So we know we want to enter higher than that. And then again, it's just a case of waiting for price to push in, looking for that lower low, lower close candle. So it'd be a lower low, lower close candle. It'd be the reverse of what we were doing before. And then that's our first chance entry, right? Or that's actually my second chance entry. First chance entry I'm not going into in this video, but again, you can go and watch it in my series. And then the last chance entries here, or the third chance entries here. And then finally, the other way that you could trade this particular one is via a Fibonacci inversion trade, or a equal measured move. Lots of people love the ABCD patterns, which come up here. So you could be entering, look at that, equal measured move, right? You've got an equal measured move lining up in there. You could use fib confluence as well. People love to use fib confluence. So you draw out your fib confluence. You've got a 1414 there, 1618. And then if you bring on your fib retracement from the high to the low, you can see you get that nice confluence with a 1414 and the 786. What that might also mean is you've got a pattern set up as well. X, A, B, C, D. You've got a bat pattern up here at the 886. So that means you don't have to wait at market. You just set the limit order and you short. But it's a real nice zone. This zone here, what you can do is just use something called CTS, which combined technical scoring. We teach this at Tier 1 trading. It's phenomenal. Every trader should learn that, no matter what style of trader you are. What you can start to do is now drill down your kill zone. So instead of this big broad kill zone, you're now like, right, now, in here, because there's so much confluence going on in this tiny little zone here, I can just set a limit order. I'll set a limit order at 96.28 and I'll get short because I know I've got a great reward to risk profile, 1.8 to 1 nearly, pound Aussie, great, loads of money to make, and I can just get in there and I'll be aggressive because I've got so many point scoring, such a high quality setup. There's also something called a fib inversion trade set up here, which I'm not going to go into in this video. You can type in Fibonacci inversion setup on my channel, and basically you're looking at an inversion from the pullback, and then you're looking at getting in on the 1618 extension. But I'm not going to go through that in this video. Those are the three setups I'm looking at as a trend continuation. Really nice, because one, this one's a 1.8 to 1, and I've got 2 4 to 1 roughly setups on best case scenario. So let me know in the comments if you enjoy these types of videos. I'd love to know if you want to see more of these, and also let me know what you'd love to see more of. If you've got any questions on trading, we really do read all those comments. We want to help this trading community as much as possible. It's the only reason I set out to do this channel in the first place, and we would love to get this information out to more people, and we're on a goal to hit 1 million subscribers. And if you've been here for a while, I'd love your help in that. I'd love you to help us share this with as many people as you can. So until next time, take care, and I'll see you then.